Yeah.
Thank you.
You're welcome. Okay, so statement of financial position analysis. In developing another component of the detailed analysis we looked at of financial statements, the key issues in SFP analysis are to assess a business financial position. So we looked at the statement of comprehensive income or the income statement analysis that entails assessing the business performance. Now, this analysis of the statement of financial position looks critically at the financial position, considering the quality of its asset and liabilities. So the assessment is on the assets and the liabilities of the entity, and also conclude on whether the statement of financial position is strong or weak. So there are parameters that you look at to provide if the statement of financial position is strong or if the SFP is weak. Also, calculating ratios that interconnect the SFP and the SCI is relevant in this analysis. So, for example, the days receivable, the number of days, and also the activity ratio that looks at how many times. So you will see that one has to do with revenue and is in the statement of comprehensive income, and the other component is the accounts receivable, which is in the statement of financial position. So these ratios will help us also make those decisions, and they are important aspects of the detailed SFP analysis, which concerns position, the content of the SFP, structure, whether it's equity driven or debt, and also stability of that SFP is very important. So there are questions to consider and also answer when we are doing this analysis. So number one, do this statement of financial position quadrants of non-current asset and long-term funding appear balanced? So we need to ask ourselves this question. So non-current
quadrants.
Okay, good. So quadrant talks about 4. Quadrant is quad, and you're looking at the non-current asset and the long-term funding. So it's the long-term is the non-current assets funded by equity or by debt, and do the balance of those funding appear very, very okay, stabilized in the financial position? So those quadrants, we're looking at non-current asset and also the capital structure. The company is debt driven. That means long-term assets are funded by debt principally, which is risky. If it is equity driven, long-term assets or fixed assets are provided by equity. So a balance is very important and safer if it's equity driven. So the quadrant of non-current asset, equity, debt, and non-current asset are the 4 areas you should look at. So your non-current asset, your non-current liability, long-term liabilities that entails all the debt you owe, then the current assets. Some fixed assets are funded by current asset, which is very risky because you are jeopardizing your working capital management. Then the equity, which entails retained earnings, ordinary shares. So those 4 are the quad we're looking at. I'll talk of 4 quadruple. Yeah. So those 4 components really show if the company's SFP is stable or is being financed by one of those components. So is either it's financed by current assets, non-current asset, which is debt, or equity. If it is current asset, then it's a dangerous position. We'll be looking at that as we discuss. So take note, like you asked, the quadrant analysis can easily identify if not current assets are being funded by current liabilities, short-term credit, which is another dangerous issue. Current liabilities are day-to-day, month-to-month debt owed that need to be settled and not for funding of long-term liabilities. So if current assets are used or current liabilities are also funded by the non-current asset, then there's a problem. Short-term credit is dangerous to fund long-term assets. So we'll ask ourselves another question. What is the quality of the non-current assets? Are there large tangibles such as equipment or building with a clear market value? So when you look at building, is it leased or is bought? You look at your property, plant, your plant and equipment, the equipment assets, are they clearly provided with their market value? So the quality of assets is very important. So the percentage now of the tangible and the intangible, what is it? Is it 50-50? Are the tangibles higher than the intangibles? So these are things we look at in analyzing our SFP. Or are mostly intangibles, such as goodwill, independently valued? So the goodwill now, it's the brand of the business, how the reputation has grown over time and is valued in monetary terms. So what is the value currently of the goodwill of the business? I know you've done all of that in consolidation in determining the goodwill. So the intangibles is important to see and analyze its value, and the independent valuation of goodwill also on the SFP. So aside the tangibles, the intangible is also very important. Also look at the majority of long-term funding. Does it comprise of share capital and retained earnings? So we've spoken about that. Or is it mainly long-term debt and therefore more risky? So I've spoken to that, to this slide before we came here. So you are either funding your non-current assets by debt or by equity. And if it's debt, it's more risky. Also, the statement of financial position debt, is it soft or is hard? What is a soft financial debt? For example, directors are loaning the company money. So it's a soft financial debt because directors are generally stakeholders and internal managers. So they could loan the company some amount of funds at low interest rate, especially if they are equity-driven company. But the hard one is external funding with high rate of interest, and that is quite risky. And it may have short redemption date, meaning that the time to redeem the amount may come close, and they may give you a very short period, 1-2 years, when is the debt due for repayment, looking at the time. Is this spread across 5 years, 10 years? So the softness or the hardness is another area to analyze financial statements. If the funds are provided internally by directors or by owners, it makes a lot of sense. But it's hard when it's external funded, maybe looking at debentures, looking at preference shares. It's hard because the rate of interest can be very restrictive. This is very important. We also ask that, does the business have the funds, or can it generate the funds necessary for repayment? This analysis will look at in depth in the cash flow statement analysis. So we're asking, can the funds pay for, or the business, can it pay for the funds that were borrowed? If you borrow the funds over a 5-year period, can you sustain that? Can you pay conveniently? Can your operating profit cover the interest elements? These are questions to ask. Also, does the statement of financial position, the quadrants of current asset and current liability, do they appear balanced? Is the current asset covering the current liabilities above 1? If not, would you consider this to be appropriate given the nature, sector, industry of the business? So the current asset and the current liability quadrant is very important in determining working capital management. Also note that quadrant analysis can easily identify if current assets and current liabilities, short-term credits are roughly equal or maintain the business short-term debt. So take note that current asset and current liabilities, which determines company working capital, if it's roughly equal, then it shows that short-term debt is overloaded, because if your current asset is equal to your current liabilities, you don't have any fund for any other thing. And short-term debt is currently overloaded and at risk of default or payment. But it should be above it, like 2:1, 3:1, like we've seen in the ratio analysis we spoke about. Also, another question in analyzing it in SFP is, what is the quality of the current assets? How liquid are they? Do they comprise mainly of inventory, slow pay receivables, like we saw in Dan Kabir? Or do you have sufficient quantity of cash or near cash, cash equivalents available? So these are questions you ask in SFP analysis. Also, are the current liabilities softer in terms of trade payables and accruals, or harder, bank overdrafts and non-negotiable liabilities, such as items like deferred taxes, VAT, payroll, social charges, company income tax? So soft current liabilities like trade payables and accruals are essential in our analysis, while harder ones like bank overdrafts that have interest or non-negotiable liabilities you must pay to the government, taxes and other statutory remittances, are the components and the percentage we should be able to analyze very, very critically. So this above list to enable us perform structured analysis of the components of the SFP from the pre-scene. So mostly the pre-scene has all this analysis. The examiner provides them 2 weeks, I think, to the exam, or a week plus to the exam, and we should be able to ask these questions while we have the pre-scene. So this analysis should be expanded to include notes of the account if it's provided, where more details are given. And where more details are not given in the pre-scene, then maybe it will come in the unseen. So generally, that's a short way to analyze the SFP. You've asked about the quadrant analysis, but I think this is succinct and comprehensive enough before we go into the quiz for the day. So let me don't assume you understand everything. There's quiz also, so that it will resonate with you. Every section, we have 4 more sections to round up this. There must be quiz, so that, in fact, when you ask the quadrant analysis, I remember there's a quiz question on quadrant analysis. I say, Julie knows that she's going to face this later, so she wants to be sure what quadrant is, And
it's still confusing. Quadrant is the equity, current liabilities, current assets, long-term liabilities. Yeah?
Exactly. So quadrant means 4. But you can look at it at every component of the financial statement. So the non-current asset, non-current liabilities, current asset, current liabilities. You can look at it that way. And you can also look at state equity. You can look at debt. In any way you look at it, those are the components. And that's why they are quadrants. But we just mentioned 4. With equity, it's going to be 5. But equity is part of it now. Yeah, so you are looking at the funding. When you talk of funding, you may have to remove one component. So
remove current asset.
Remove current asset, or you may want to remove current liabilities, depending on what 4 of those components are affected, depending on your analysis. So the quadrant just depends on your definition. And if you're looking at servicing of or payment or funding of a non-current asset, you can look at equity, you can look at non-current liability, current liability, and what is the 4th one now?
Non-current liabilities.
Yes. So those 4. So just know which components are affected by which, and you're looking at how they are funded. So typically, your non-current assets should be funded by either equity or debt. That's non-current liabilities, and not by current. And not by current liabilities. Yeah. Exactly. So it's simple, but it's not easy, I used to say. Exactly. So are you ready for your test?
Very ready.
Okay, fantastic. Okay, so let me write down now. We have only one person on the call.
Maybe one of them have they all passed the case study. This one, people don't really join case study.
Most of them have not joined. I don't know. People underrate case study a lot, but audit now you see them plenty in the class. Audit is always having traffic, but case study less traffic. In fact, somebody reached out to me that he's going to read. I don't even know whether it's a he. Person just chatted me that he's going to start reading case study 2 weeks before the exam. And I was like, reattempting or first time? She said first time. I said, it's risky. Person said, well, I can do it. I said, okay. When I can return the paper, I think maybe you re-strategize. How can you read case study 2 weeks before the exam? Well, maybe the person is super intelligent. So,
or maybe the person is into reporting. The person writes a lot of reports, so maybe that's why.
The person is doing
Make person-
5 papers. 5 papers for the first time attempt.
Wow.
I was scared of that student. I said, oh, this one must be an extra genius. Let me don't discourage him or her.
It's good to do 5 papers. Didn't I do 5 papers thinking I was a superstar?
But you at least have started preparing. This person I'm talking about has not started reading as at was it the day she was chatting me. I want to write 5. The person is
notebook. Yeah.
The person notebook now guru. Okay.
Mm-hmm.
All right. So let's start now. Which of the following is a key objective of SFP analysis? A, to assess the profitability of a business. B, to evaluate the business financial position, asset quality and liabilities. C, to determine tax compliance. D, to analyze the effectiveness of management policy.
B.
So it's too simple. But then I'm not sure of the answer. We'll see.
Wait, to assess the profitability of a business. To evaluate the business financial position, assets policy. No. Asset quality care. It's A.
Final answer.
Yes, final answer.
Okay, final answer A.
Wait to asset quality. Wait to. Asset quality.
Let me read it again. Which of the following is a key objective of statement of financial position analysis? A, to assess the profitability of the business. B, to evaluate the business
What I say
financial
A
position.
and B? A and B now.
Okay, you want to choose A and B as your pick or just A?
No.
You have to choose one.
A.
It can't be 2. You have to pick one.
Okay, A.
All right. So A, final answer. So let's go to 2. You're welcome on the call, Aisha. We are already done with statement of financial position
Aisha,
analysis.
how are you doing?
Good evening. I'm good. How are you? Good evening, sir.
Hello.
How's work today? Sorry.
Very well, thank you. Aisha Pia.
Hello, sir. Thank
Sorry, Julie, you should be on Lent now, right? Are you observing Lent?
Yes, we are Lent. Yes, Lent.
Oh, okay.
Yes.
Fantastic. How is Lent today?
We thank God. I'm not doing it too much. I'm just till 12,
Okay.
so that my head can be correct. Because we already did fasting beginning of the year for 21 days. Preparing for the year. Then Lent, I think till 12 and other things. You have to do other things to observe Lent too, not just fasting.
Yeah.
So I'm trying our best to prepare for the resurrection.
Exactly, I understand. Ramadan is 30 days, Lent is 40 days. Wow.
Yes, at the same time. I say good one.
At the same time.
Exactly.
At the same time.
I can't into it, so I will qualify.
I'm telling you.
Yes, so honestly.
I'm telling you. Good one.
It's all the shorts messy.
Amen. Amen. All right, that's nice. So, Aisha, you just join us in question 2 now. Yeah. Okay.
Yes.
I've not even read itself. You're already answering. Okay, what does quadrant? Okay,
yes.
quadrant. What does quadrant analysis help identify in a statement of financial position analysis? Okay, whether non-current assets are funded by short-term liabilities. Okay, hey, we'll see. We'll see if that's the answer. Aisha, are you guessing or you just?
I can't even guess. I don't know what quadrant analysis is.
Okay, you know what it is already?
I don't.
Okay, it was in the class we spoke about it. All right. So the other options are the profitability of a company, the efficiency of operational processes, the tax obligation of a company. Okay, so she picked A. Which of the following is considered a soft debt in financial statement, financial position analysis? Director's loan.
Director's loan. I know this one.
So that was fast. All right, A. Number 4. Why is it important to assess the quality of current assets in the statement of financial position? To determine if the business has enough liquid assets to meet short-term obligations. Yeah. To evaluate the company's long-term profitability. To ensure the company has enough inventory. to analyze how effectively the company is using its fixed asset.
It's
Okay,
A.
okay, final answer A.
Yeah.
All right, this one you people have 4 A's. A. Okay, final question.
That number 1 is not B, so.
I don't know. You picked A, so except if you want to change your mind before we check the answer.
How can everything be A? Yeah.
It's possible, and it may not be possible. So the final question. Wait.
Final question. This one I'm seeing. This number 1 I'm saying.
And you said it's B.
Oh, that was the answer. I displayed the answer. You have failed it.
I didn't see it.
It's good you didn't see it. All right. So, what does the high proportion of goodwill in non-current assets indicate? The company has strong tangible assets. The company may face challenges selling its asset in a crisis. The company has excessive short-term liabilities. The company is highly profitable. Wow, this question is tricky, I think. What does the high proportion of goodwill in non-current assets indicate? Company has strong tangible assets. Company may face challenges selling its asset in a crisis. Company has excessive short-term liabilities. Company is highly profitable.
D, highly profitable. That's what I'll go with.
Okay, A is going with D. J, what are you going with?
D.
Okay, you two are going with D. All right, let's see now. Judgment Day. Number 1. That's true. So she failed number 1.
I thought it was tricky.
So A is incorrect. No, it's not tricky. When you talk of income statement, you don't talk of performance or profitability. Profitability.
Financial position, Chineke. I thought you said financial statements. I didn't see that. I didn't see that.
Financial position. So profitability.
I didn't see the financial position.
Okay, that's the
statement of financial position. I thought it was the whole financial statement. It is B now. Profitability is income statement now. No.
So. I'm glad the first one you have started dropping points. I'm glad.
I didn't see that. I thought of financial statements I saw. It's everything.
Financial. It says which of the following is a key objective or statement of financial
Of course,
position?
I know the answer now. That is the answer. You didn't even think about it, so. On my mind, I think just, oh my goodness. It's okay.
All right.
2B.
Number 2 is not B. What does quadrant analysis be? All right. So quadrant analysis helps. So let's read it now for Aisha. Quadrant analysis helps determine if long-term assets are financed by short-term liabilities, which can indicate financial stability. So the quadrant, Julie asked the question that what does quadrant means, and I said it's 4. So we are determining 4 things: short-term, that's current liabilities, and non-current liabilities, those 2 components. And we also look at whether the assets are funded by equity, which is less risky, or funded by debt, which is highly risky. So those 4 components in dealing with the financing of non-current liabilities is very important in your financial statement analysis. So in the pre-scene, when it's provided to you, you need to check if short-term liabilities are long-term assets are financed by short-term liabilities. If it's short-term, then it's catastrophic for the business. And that's what the quadrant analysis looks at critically. And if it's financed by equity, better. If it's financed by debt, it's risky. So those are the analyses we perform. So I believe quadrant is clear now, right?
Yes, it is.
Okay, fantastic. All right, so number 3. Oh, wow, A. That was good. That showed that Julie was following the lectures. But Asha also said A.
And she knows it. I think she knew it before.
All right, directors' loan are considered soft debt because repayment terms are typically flexible compared to external funding. Exactly. Number 4, A too. That's good. A. Okay. Why is it important to assess the quality of current asset in the statement of financial position? Assessing current asset quality helps determine liquidity and the ability to meet short-term liabilities. Exactly. And finally, what does the high proportion of goodwill indicate? The answer is B. I like this. So they both failed it.
So the good is financial asset that may not have a market value, making it
difficult to convert into cash during financial distress. Exactly. So one of the challenges is valuation. How do you value goodwill? And that's what we spoke about. So it's not like an asset you buy, it's something you develop over time. So how do you value it?
Yeah.
So that's
do you know what I was seeing?
No.
I was seeing tangible and not intangible.
Yeah.
I was wondering what were it. Honest, that's what my eyes were seeing. No.
You have not eaten. Are you sure you've broken your fast today? You have not
Goodwill
broken.
does not represent tangible. Okay, does not.
But tea is not food now. You need to eat, Julie. You can't see clearly. You need to eat.
No, I ate this afternoon. No, you know, I do it at 12.
But you've not had dinner.
Dinner, I can't date. If I try it, I will sleep throughout the lecture.
Goodwill does not represent tangible assets like your building. Okay. Or am I interpreting it wrongly?
No. Go ahead. What are your thoughts? You're saying something.
Do you know? I was just intangible. I didn't even say I was just intangible all through. Hey.
Goodwill is not intangible assets. Is an intangible asset, and yes, they build it over time. But why I picked D was because the reputation that has been built helps to me.
Exactly.
Understanding it helps to give it an edge in terms of merger or acquisition.
Well,
so that was basically it for me.
Yeah, so that's one of the components, but it may not necessarily indicate profitability. So that you have a market value doesn't mean it's profitable. If you look at a high proportion of goodwill in non-current asset may not necessarily indicate profitability. It just increase value. And the value is not seen. It doesn't culminate in cash. You know, you paid cash for your tangible assets. So for intangible asset, this is a valuation. How can you convert that valuation to cash? Some companies, they may not want to pay. And if you have target situation where they are buying you over or you are merging with another company, that value that is in the market may not necessarily mean what the acquirer is paying for. If the value is on your SFP or valued by external experts, valuation experts say it's 2 billion, and the company acquiring you say we can't pay 2 billion, we'll pay you 500K. You want to sell the company, you may have to pay. So in terms of financial distress, your value does not culminate in automatic cash. That's what this question is saying. And that's why it says, what does a high proportion of goodwill in non-current asset indicate? So valuation is different from actual cash conversion. And it may be challenging to get that actual value from the market. It's like buying a car now, and after 5 years, they value it as an amount. Then the person that want to buy, say, they priced it how much? You said 2 million. I'm buying it 500K. And you that need cash, you may just sell it at 500K, but that's not the value.
Okay. Yeah.
So that's what this question speaks to. When you guys chose D, I just kept quiet. I was like, all right, that means you didn't read this final phrase or you were not paying attention. So if you look at this last place of the this last area of the lecture notes, let me just deviate a bit. Let me go back. It speaks to that. Okay, so look at this slide. They say, what is the quality you asked? The questions you should ask when performing statement of financial position analysis. The quality of non-current asset, largely tangible, such as equipment and buildings with a clear market value. Those ones are purchased. But mostly intangible, such as goodwill. Can this be sold in a crisis? What might be the independent market value of this item? So these are questions you ask. In a crisis, like I said, you may not be able to get what you want, irrespective of the value. So this slide speaks to that, and please take note of it. Statement of financial position is an analysis you can't run away from the case study exam. So that's why we're taking our time to really understand some of these components and how to speak to the numbers. All right, so are we clear? Any other questions? Are we okay with this?
Okay.
Yes, I am.
All right, that's fine. So can we go next to our final financial statement analysis, the final components that has not been tested at all in the 21 editions of case study. He has not tested case statement of cash flow analysis. He has not even come up with a cash flow analysis. So this one is a potential area to be tested. So pay attention. Okay, so in completing also detailed analysis like we saw in the SFP analysis, an analysis of statement of cash flow provides opportunity to assess the business cash flows as opposed to profits or losses and review all aspects of its financial operations. So the cash flow statement generally looks at business cash flows, movements between operations, investment, and finances. It is important to understand that although the statement of cash flow combines information from the SCI and the SFP, it is not simply the third financial statement. Yes, so a lot of people look at cash flow statement as the third financial statement. No, it's not. Instead, it might be considered as the actual one. You said?
Which one is the third one?
Yeah, so people generally think it's the third one, but it's not. Actually, it's like the starting point. So from a numbering perspective, it's looked at as the third, but in actual aspect, is the starting point. If you look at the elements in the financial statements and the analysis you are performing for the business. So why is it the starting point? The cash flow tells you how the business is managed in financial terms at all levels. And that is why it's the starting point. So performance tells you how profitable the business is. Position tells you how stable and strong the company's asset and liabilities and capital are. But the cash flow tells you how the company is managing the business in financial terms at all levels. And this is why it's the starting point, even though it's the third statement you prepare after the first two. So this tells you actually what the business is doing financially. So you see the movements in operations, you see the movements in investment, you see the movement in financing activities. That is why it's the starting point. So each line of this statement significantly provides information about the financing activities and quality of financial management of any business entity at different levels. Exactly. So looking at the cash flow statements provide you details on the activities of the business and the quality of how they are managing it. And that's why you see difference. You see difference between this year and this year, and you look at the cash flow statement, whether the cash and cash equivalent matches with the balance sheet. It's also like a check on some items in the SFP. So from credit control, we're looking at the components now. When you look at credit control, accounts receivables, the cash generated from that, to board level decision like purchase of fixed assets, payment of dividend, that's dividends they've declared. These are financing activities. Account receivables are operating activities. So these are very important components that we look at in the statement of cash flow. So the questions we ask as we are doing the analysis, and we need to be able to answer it from a cursory or the bird's view when we have the pre-seen or the unseen. We need to ask how successful is the business in generating cash from its operations. How successful is the business in generating cash from its operations? This starts with analyzing the operating profit after adding back non-cash items. So the first component is you carry your operating profit or your profit, your bottom line. You add back non-cash items like depreciation and amortization. You also ask questions like, is the working capital being managed in line with increase or decrease in business activity? So you are trying to validate if cash is being soaked up by unmanaged account receivables or inventory. So this is a good test. The cash flow statement tests the increase or decrease in these two components, whether it's slow moving inventory or slow receivables. The cash flow statement helps you depict this in working capital management. So looking at the same working capital management, are accounts payables being managed effectively and responsibly? Link back to your ratio calculations for receivables, payables period, inventory turnover. So from these ratios, the cash flow will help you capture it properly to see increase or decrease in this area. So they are interconnected and they make a lot of sense. Is the business earning an appropriate return on investment? Is it paying out significant sum on the servicing of finance, especially if it's debt driven? So you look at the earnings from returns on investment and how it's able to service debts on finances. You also ask what has been the impact of payments for external regulatory obligations, taxation. Are the payments consistent with the liability? So in the tax element in the current liabilities, if it has not been paid, are the amounts higher than the other liabilities or lower? It's very important to ask these questions. What is the company policy on capital and financial investment? Is there appropriate non-current asset replacement policy? Is it being properly funded by long-term funding? Is it equity or loans, like we just saw in the quadrant analysis? Very important question to ask in your SCF analysis. Also, that policy, is there a policy or is the policy on dividend appropriate? Do they declare profit do they declare dividend every year, or is after 2 years, or is after 5 years? Can the business afford those dividend payments? Good questions to ask. What is the company's long-term financial strategy, and is it appropriate for the business? So the financial strategy, should be driven by equity or debt? And how do they want to be financing the company? What is the mix? What is the financial structure? What do they leverage on? Do they leverage on equity, or do they leverage on debt at a particular period or time? Is the company making best use of its liquid resources? Is the company making best use of its liquid resources, that is current assets? What is happening to the cash balances in the business? So your cash and cash equivalent is supposed to marry with the closing balance of your SCF. So are the balances fluctuating or undiluting, meaning how much is being held at a particular time? If the business is cash driven, like banks where they need cash always, is the cash sufficient or is it fluctuating? That's what it means by undiluting. So what is happening to the cash balances in the business? So the cash flow statement will bring this out clearly to bear, depending on the business, industry, or sector. So the above list will enable a structured analysis of the SCF and the components of each of them on each line. It's very important to understand the change from the opening and the closing balances of the cash items. So candidates for the case study exams, you understand that it's not possible to predict the case study examination and what the actual analysis might be that you are required to undertake, or in what detail you are supposed to undertake them. So you must prepare yourself accordingly. And the statement of cash flow analysis has not been tested, so it's a potential area and is a red flag area that may come, but then we need to be prepared, and candidates must always remember that it is a good sign of good professional way to communicate clearly to the client. So prepare yourself and ensure that like these lectures we are taking now, we should be able to remember that it's a good sign of how to communicate clearly to the client. And you can also take ICAN Kabir's financial statement. I provided the cash flow statement to look at the movements and be able to speak to this lecture after this ICAN Kabir's cash flow statement, analyze it and write something if possible on your own in case, because there's no past question or pathfinder or cash flow statement analysis. So you can use ICAN Kabir to form your notes to see how the movements in operating, investment, and financing activities have done. It will help you communicate clearly your thoughts. Remember, it's not just the numbers in the cash flow statement, but how you are able to communicate the movements in those SFP. So numerical analysis alone is not sufficient. Exactly, I just said that. You must demonstrate that you understand what the financial story is. So the statement of cash flow state analysis is not an exception. So the numbers in the cash flow statement don't mean anything. They don't earn you marks. even if you are asked to prepare it. And the case study, they won't ask you to prepare cash flow. They will ask you to provide skillful commentary and what you understand, and you provide financial story of all the components of the main financial statements, and also prepare to examine what that story is in whatever way might be requested in the requirements. So it's very important that even if the cash flow statement is presented, you should explain the cash flow statement based on the requirements in the case study exams. This is very important. I love this. It's very comprehensive, and the way the examiner put it in the case study is quite decipherable. All right, so that will be the end of statement of cash flow analysis. So before we go to the test, I will indulge us to go back to Dan Kabir and speak to those numbers. I will ask you to write an assignment to me, but if you do, I will mark it. So you can just speak to the operating, the financing, investment activities. Just write something on it, read it, in case we don't know, just to help you understand this.
An assignment.
You said?
Are you giving us an assignment now?
No. I won't give you an assignment. You have so much in your plate. But if you do it, I don't mind. I
don't know. What are you asking us to do? I don't know what. What are you asking us to do?
Okay, so I'm asking you to take Dan Kabir's statement of cash flow. You know, we looked at SFP and SCI. So there's a cash flow statement in Dan Kabir. I want you to take it based on these lectures you had, write something on it and read it. So you look at the statement of, you look at the operating activities, cash flow from operating activities, write something on it, look at the movements in those items, write on it, write on investing, write on financing. So read what you wrote and look at how you told a financial story or you spoke to the numbers in that Dan Kabir. And when you read it, it will help you understand. And if you want me to also share my thoughts on what you wrote, you can send it to me, but it's not compulsory. I'm just suggesting you do that so that you can have an in-depth understanding of statement of cash flow analysis and how to speak to the numbers.
So talking about the assignments, what about the reports we submitted earlier on Dan Kabir?
Yes, exactly.
So the World Bank something.
Yes, on Wonder Bank Limited. Yes. So Julie asked the same question, and I'm almost done. In fact, before your test question comes tomorrow or Saturday, mock exam 2 is supposed to be tomorrow for both audit and case study. So before it comes tomorrow or Saturday, you should be able to get your script. I'm almost done. I'm on it and for both courses. So I will share it before any more question will come so that you can see your comments, my comments, and what you should adjust and your score also. In answering your question, tomorrow or next maximum.
Okay, thanks.
You'll get your script. All right, you're welcome. So do you have any question on statement of cash flow so that we can look at our test quickly?
No question for me.
All right, that's fine. So will you guys promise me to do that analysis on your own when you are free? With Dan Kabir?
Yes, sir.
Okay, good. That would be good.
Yes,
I like that. Okay, thank you for that commitment. So question 1, what is the main purpose of analyzing the statement of cash flow? A, to determine only the profit of a business. B, to assess how well the business generates and manages cash flows. C, to replace the need for a state of financial position analysis. D, to focus only on revenue collection.
B.
What is the main purpose of analyzing the statement of cash flow? Okay, J said B.
I'm also going with B.
Okay, A too is going with B. Okay, final answer. All right, what is the key indicator of effective cash flow management in a business? What is a key indicator of effective cash flow management in a business? I've not even read it, sir. A, consistently increasing accounts receivables and inventory levels.
100% is calling me.
Okay, B, you have not seen question 3 to 5, so don't even assume now.
B.
All right. B, unmanaged increase in trade.
No, I said C.
C, effective working capital management aligned with business activity. D, large fluctuations in cash balances. Okay, so J is speaking C. All right, what is a key indicator of effective cash flow management in business? We're waiting for A. A, what's your pick? I know she's still thinking.
I'm actually thinking.
Yes, the question is a bit tricky, but then Jay attacked it one time. She wants to spoil my day to get 100%. Don't worry. I know you are out for me today. Me too, I'm out for you. I don't want you to score 100%. Stay at 80
I'm
and
not
60.
sure, but I'm picking A.
Okay, consistently increasing accounts receivable and inventory level. So J picked C, A is picking A. She's going with her name A. All right. Number 3, which of the following is a concern when analyzing cash flow from financing activity? Whether dividends paid are sustainable for the company. B, the number of new customers acquired. C, the effectiveness of marketing strategies. D, the volume of daily sales transactions. Tricky question. Which of the following is a concern when analyzing cash flow from financing activities? I like the question. Makes sense. Jade couldn't even fastly pick, so it shows it's tricky.
Even decide.
She didn't fastly pick, so that means somebody's 100% is at risk.
Yes, sir.
Which of the following is a concern when analyzing cash flows from financing activities?
I pick A.
I'm actually going.
J is going for A. A, what are you going for?
Yeah, I was thinking A too. But at the same time, I'll pick A.
Okay.
Financing activities, they has dividends in them.
Okay, A. We'll see. Final answer. Number 4, why is it important to consider taxation payments in cash flow analysis? A, to ensure payments are consistent with liabilities. B, because tax payments are always the largest expense. C, to reduce the importance of net profit analysis. D, because cash flow statements replace tax report. Why is it important to consider taxation payments in cash flow analysis? I like this question, so they're tricky. But then it's making the analysis of cash flow interesting. Why is it important to consider taxation payments in cash flow analysis? What's your pick, J? What's your pick, A?
I'm going to go with C, to reduce the importance of net profit analysis.
Okay, A is going with C. So J, what's your pick? I'll also ask to enable you, cash taxation, it's which of the activities? Is it operational? Is it investment? Is it financing?
Operational.
It's operational, under working capital.
Okay. So you can use that to answer this. Why is it important to consider taxation payments in cash flow analysis? To ensure payments are consistent with liabilities, because tax payments are always the largest expense. To reduce the importance of net profit analysis, because cash flow statements replace tax report. D. J, what's your pick?
I don't know. Let me see.
You have to know. Pick one. A has made a pick, so please pick one.
Take C. That's the only thing that makes sense here.
Okay, you're going with A. All right, C. Okay, final answer, C. Finally, how does the statement of cash flow help access long-term financial strategies? How does the statement of cash flow help access long-term financial strategy? A, by showing if the company is funding non-current assets appropriately. B, by tracking daily operational expenses. C, by excluding financing decisions from financial reporting. D, by focusing only on short-term liquidity needs. How does the statement of cash flow help access long-term financing strategies? By showing if the company is funding non-current assets appropriately, by tracking daily operational expenses, by excluding financing decision from financial reporting. D, by focusing only on short-term liquidity needs. Tricky questions.
Very, very tricky.
If you hear Julie didn't answer quickly, just know that question is tricky. Exactly. All right. G is going for A. Then A is going for what? A, what are you
I'm just going to guess. I don't know the answer.
I lose logic now. You know, when I'm doing MCQ, sometimes I lose logic. This can be this, it can be this, based on this. So you can use logic if you don't know the answer. I'm currently preparing for CISA exams, and it's 150 OBJ. So when I'm doing my test,
which one is CISA?
Certified Information Systems Auditor exams.
God, when will all this certification finish?
My sister, as a professional, it can't finish. Oh. It can't finish.
Exam.
Yeah, I'm preparing for CISA. I'm in audits now, so I need the CISA is Certified Information Systems exams. It's administered by the Information Systems Association, Information Systems and Control Association in the US. So the questions are 150 OBJ and it's $550. So I must pass it at first attempt or else. Voila.
It's OBJ, so it's simple now.
It's not simple. There are questions like this.
Did you have the money attached?
I'm telling you, the questions are like this. So you have to do elimination. Some you don't know. You have to look at this parameter, is it correct? This is
and the answer is looking at your face, straight at you.
Exactly. So it's something like this. That's why I said Aisha should use logic. So some I'll use logic and I'll get it.
Nice.
Yeah, so use logic to get this one. How does the statement of cash flows help access long-term financial strategy?
It doesn't matter. I said A.
Yes. J has picked, so
A too.
A is brainstorming.
A. I'm going for A.
Final answer A?
Yes.
Okay. The only good thing is I'm happy. I'm not sure all of you will score 100%. That's my first joy.
If I even get one, I should.
No, you score more than one. Okay, so judgment day, number one. What is the main purpose of analyzing statement of cash flows? Okay, both of them got it. B and B. So to assess how well a business generates and manages cash flows, the cash flow statement helps evaluate how cash is generated and used in operations, investing, and financing activities. Yeah, good explanation. Okay, number two, J got it, A failed it. What is the key indicator of effective cash flow management of a business? So the answer is C. J picked C, correct. A picked A. So the answer is effective working capital management aligns with business activities. Why? Managing receivables, payables, inventory in line with business activities ensures stable cash flows. Yes, that's the explanation. So A is wrong because increasing accounts receivables and inventory may indicate poor cash flow management. Exactly. So A is not correct. C is the correct answer. All right. So A, take note of that. Number three, which of the following is a concern when analyzing cash flows from financing activities? They both got it. Whether dividends paid are sustainable for the company. Yeah. So when I had A say dividend financing, I knew she would get it. Just use logic. She just used logic to pick the answer. Yeah. So paying excessive dividends can strain cash reserves. Exactly. So it's a critical financial decision to make. Good one. J has not failed anyone.
Yes.
Why is it important to consider taxation payments?
I feel this one.
Now J has.
I was looking at this thing. It's a short answer. I was looking at it.
Both of you said C, so both of you failed it. Yeah, so
I looked at it. I said, "Come."
I was contemplating on between C and A actually.
It was very tricky. I like the question. Why is it important to consider taxation payments in cash flow analysis? To ensure payments are consistent with liability. Exactly. So where you have liabilities at a particular threshold and tax is more than that, you are suffering the business. That's what you are saying. So when your liabilities are
sorry,
much,
please.
okay, so when you look at the liabilities of your business, the total mostly current liabilities, and you look at the tax element, you are stressing the business. So the tax should be at a very lower percentage than the liabilities.
Yeah.
So when you're analyzing cash flows, this is one area. So most of them ask for tax rebate, tax allowance, and that is why when a business makes losses for a while, you are not susceptible to tax. So it shows that the liabilities is suppressing the business from thriving. And that is why this question resonates very well. It's important to consider taxation payments in cash flow analysis, because cash flow taxes must be consistent with liabilities. How can I incur 2 billion liabilities and you are charging me tax of 1 billion? That's stringent on the business. It's not fair. Yeah, so that's why this question comes to be. And the cash flow analysis provides increase and decrease in cash flow from operating activities on tax elements. So both of you picked C. To reduce the importance of net profit analysis is incorrect. The question acknowledges that net profit analysis remains important despite tax considerations. So to reduce the importance of tax net profit analysis is not correct, but businesses should ensure tax payment match tax liabilities to avoid financial mismanagement, and this is more correct. Okay, so finally, I'm smiling. Somebody's not going home with 100% yet. All right, finally, how does the statement of cash flows help access long-term financial strategies? They both got it. A. Well, the first question, she did 80%. J did 80%. Well, she's doing good. Second, SFP and SCF, 80%. A did 60%. Good one. Second, also, she did 60%.
Please, let me just get 60.
Amen.
Yes,
Amen.